FOMC holds more downside ahead on the US dollar.
Previously, we actually outlined what's going to happen with dollar. So apparently the FOMC is still on a hold for the June interest rate decision. So we're still on a 4.25 to 4.5 interest rates for the dollar. So currently they're still waiting for a much higher move on the data if ever that they would continue to pause or they would decide now on rate cuts. But right now, inflation is still above the target of the FOMC. And we don't know in the coming months if there are two rate cuts or maybe one. That's what's happening with the Federal Reserve right now. But looking at the dollar, we gapped up yesterday, Thursday, and apparently it was not sustained for upside move. And previously, we actually outlined this potential move as a resistance at this level. So if you're gonna look for trades on the majors, we like to see going longs on the foreign pairs like AUD and ZD, Euro and GBP, and CAD and Swiss. And of course, not forgetting to mention the Japanese yen. So right now, dollar is still not looking good after hitting this resistance. And we also invalidated this gap. It has been closed down. And usually what we do with gaps is after it has been created, we'd like to see a support once price goes back at that level. But right now, or previously, it did not do its role as a support. And right now, what we're seeing with dollar, we would like to see a more downside move until we reach these lows. If this lows has been indeed taken out, we'd like to see a more downside move down until the 97.91 level. So this is the all-time low for this year. So if the case is dollar is still not recovering and we're not seeing any action for the dollar, we'd probably see an upside move for the foreign pairs. Please hit like and subscribe to our channel for you to be updated for more lives and videos.